not every company should raise venture money, and not every company needs to raise money at all. I mean, look at in the world we're in right now, like you can build a company and get to revenue without taking outside capital. A lot of good businesses that don't need investors, right? So you go build a business on your own and make a great lifestyle and living, and it doesn't need to be a household name, right? Or the next Robin Hood.
Welcome to the Leader's Mindset, where I bring you conversations with leaders who are making an impact in business and our communities. Today, I'm here with Matt Ober. He's a managing partner of Social Leverage and an expert in data science, financial markets, and alternative investment. Thanks for joining us today, Matt.
Thanks for having me.
It's a pleasure. I'm really excited about doing this one. So let's start with, what are alternative investments? Because that just sounds cool, and I think our audience probably doesn't all know about that.
I mean, I think the high level of alternative investments is, outside of investing in, the stock market or basic, treasuries and mutual funds. So alternative investments could be venture capital, private equity, real estate, things that are, not part of a standard, maybe retirement focused investment strategy.
Yeah, so it's not something everybody gets into. It's something that a lot of people are excited about getting into. What are kind of the pros and cons of getting into those alternative investments?
I think there's a lot of pros and cons. I think obviously diversification, access to different asset classes. With alternative investments, you get some of the brightest minds and smartest investors in the world. So you're getting access to, really strong portfolio managers. And I think, for people, especially high net worth, family offices and institutions, you need to think about both long-term and short-term investments. So most alternative investments typically come with a longer-term duration.
Yeah, absolutely, right. It's not something you're gonna pick up, and you're not day trading these things, right?
Right. Typically a lot less liquidity.
Absolutely. All right, so you started out as what's called a quant. So tell us what a quant is and what you did in your career as a data scientist.
Yeah, I started out at Bloomberg and quickly joined a quantitative hedge fund called World Quant. You can think of a quantitative hedge fund as all the investments that they do are systematic. So a lot of really smart people writing lots of code that takes lots of data and makes investment decisions without any human intervention. I was in charge of the data strategy there, so I wouldn't call myself a quant specifically, but I, was in charge of thinking about what data can we use to make the quants more successful in finding opportunities for investments.
So you weren't the one sitting there writing the code, making it all go every day. You were really asking the questions about, what do we care about? What are the measurements we should be looking at? How should we be making these decisions about what to invest in?
Yeah, we had a lot of quants that could code a lot better than I could, when we started. And so I was much more thinking about, how can we feed the machine? What data is out there? What strategies do we want to try and automate and let, these PhDs that we have hired around the world code up and find both, human and what we call genetic alpha-based strategies, where, we're looking for patterns.
Okay, what does that mean, genetic alpha-based strategy?
You have a lot of data, let's say, in a big, think of a big spreadsheet with, endless columns and data points. And you are, in an AI world, letting the AI find patterns in the data that correlate to stock prices. So when these data points do this, the stock price goes up. When these data points do that, the stock price goes down. Let's write a program that says when they do say go up, you invest, and when they do say go down, you sell.
Okay, very cool. So what is the difference between being a great quant and being a great chief data scientist?
I think in a quant role, you need to be heavy experience both math and programming. And I think in a data strategist or, a data leader role, you need to be thinking about like all the different pieces. It's great. There's a lot more team members you need to manage. There's a lot of data that you need to negotiate. Typically in a quantitative role or a quantitative fund, there's hundreds, if not thousands of vendors you're buying information from. So you need to just think about that from a compliance, a risk, a negotiation, a business perspective. And then how does that all fit together? Once you actually have the strategies, what type of risk and controls have you put around it to make sure that once you start trading, you don't lose all your money?
Yeah, I imagine risk and controls in a business like that in trading are even more important than they are in other businesses.
That's right. I mean, I think in call it the biggest hedge funds in the world, risk and recruiting are probably the most valuable piece of the business. You got to hire the best people. You got to keep them. And you have to have tight risk controls to make sure that they don't get out of control and, bet the farm and lose everything.
What were some of the things you looked for in the people you would recruit into that business?
I mean, I think in a company like we had, there was either you're hiring people with pedigree and experience, right, that have done it before, or we were hiring the smartest people coming out of their PhD programs and, allowing them to work in any country around the world. So, every role is different. When I worked at Third Point, I needed data scientists or data analysts that had more outgoing personal skills because we were working in a traditional investment firm where we had to speak to the front office people every day. Another world, in a quantitative world, you walk into a trading floor, you don't hear a single sound except for a keyboard being banged on,
and probably not even a keyboard being banged on anymore these days.
Fair enough.
Yeah. So tell us about Social Leverage. What's it all about, and how did you come to be part of it?
Sure. So Social Leverage, we're a early stage venture capital firm. So that means is we invest in technology companies when they're first getting started. Been around 17 years, started by my partners, Howard Lindzen and Tom Peterson. Howard was the founder of StockTwits, which is kind of like the Twitter for finance. He invented the cash tag. So when you see people talk about like Apple online and they want to talk about Apple the stock, they put the $ and then AAPL. I actually cold called Howard back when he started the company when I was at WorldQuant, and we bought the data from him. And through that, we built a relationship. We did some venture investments when I was at the hedge fund, followed along. I became an investor in their funds. And, fast forward to today, I've been here almost 5 years. We're on our 6th fund. We write, $1 to $2 million checks into companies at the earliest stage. So most well known for being first investors in Robinhood, eToro, Alpaca, Customer with K, YCharts, Manscaped, and a lot of other companies along over the years.
Yeah, you have a pretty impressive list of investments that Social Leverage has made over the years. And as you said at the beginning, I think you said 17 years?
17 years ago. Yeah, that's about right.
God, it seems like forever ago. What got you to make the change from working for the big investment firms, the hedge funds you were working for, to jump in with Social Leverage?
I've been doing venture investing for a long time within the hedge funds. I think that I've known the guys on this team since the very beginning. I like the small team, less politics. We like winning, very similar mindset, family-like atmosphere. I think, post-COVID, I was ready for taking the change. I think also, in a smaller firm like this, you could say more risk but more upside, right? Like when there's 4 of us plus, there's 3 or 4 others on the team, like it's pretty clear, if we do well, everybody does well, right? Versus if you're in a shop with a few hundred people, you can imagine the bickering every year around bonus season. So I think, controlling your own destiny and your own upside and, building something for the long term was exciting to me.
Yeah, I was in the Air Force for 20 years and then straight into entrepreneurship. So I don't really have any personal experience with the bickering of bonus season, but I can only imagine what it's like when you get to the end of the year like that.
I always tell people in a hedge fund world, you do 10 months of work, 1 month of politics, and 1 month of prayer. So and then you start over. In a venture seat for us, it's a 10-year fund. So once we raise the funds, it probably takes us anywhere from 18 to 36 months to deploy the money initially in the companies. And then, the best companies take 9, 10, 11, 12 years to get public or get acquired, the real successful ones. So it's a long journey.
Now, the companies that you come in, you're giving out, you said about $1 million to $2 million. Those are typically seed round kinds of things. Have the companies you invest in, have they mainly done a pre-seed round? Have they done friends and family money? Where do you pick them up?
Anywhere in that journey. Some will do some friends and family. Some have done maybe a pre-seed. Some may have not raised anything and just kind of bootstrapped it on their own, and we're coming in. But we're typically, the first institutional, like real fund coming in, and pricing the round, putting in the governance, creating a board, so forth. That's typically where we enter.
Yeah, a lot of times you're the first ones who are really kind of turning it into a real company, right?
That's right.
So, as an early stage investor, the leadership team of a startup is really important to you. What leadership qualities or skills are you looking for in a founder or the rest of that leadership team when you're considering an investment?
I think now, from a leadership perspective, we're looking for people that, have experience, deep domain expertise, have built teams over time. They've got to have a vision and a way that they can attract talent, maintain talent, right? Kind of some sort of magnet that wants to bring people in. Why are people excited to be around them and work with them? Typically you want to, we're going to spend time with them, get to know them, have a meal with them, see if we want to work with them over the next 10 years and talk to them on a daily, weekly basis. And it's nice to see people that have dealt with adversity over time, so that, no startup's going to be a, straight up into the right type of journey. So like, what have they dealt with and why are they building this and what excites them about, the path forward?
Yeah, if you're a new entrepreneur or a new startup founder and you haven't dealt with adversity yet, get ready. You're going to deal with some really quickly. So
that is right.
So what are the most important measurements that you think early stage startups need to pay attention to, and why?
Listen, I think each company has to have its own KPIs or, metrics that they're trying to beat and make. I think some companies are trying to grow and it's less about revenue. Some more strictly trying to get to revenue really quickly. I think, in an AI-based world that we have right now, like sales, go-to-market, distribution is probably the most important thing, right? It's not that hard to build a lot of products. Sure, there's really deep tech and other areas that we're not really experts in that, you have to have real technical expertise. But I think if you're building software or you're building something that, is going to be competing against others, you got to get out there and get some distribution and get clients. And I think, we're seeing, the best companies are getting to millions in revenue in the first year, which I think, historically took longer.
Yeah, it's definitely been a change in the magnitude of that number, right, for the companies that are getting it right. But that go-to-market strategy, both doing it and executing it, are really important. I think that's where, a lot of startups get caught up in the make it work kind of thing and forget about the go-to-market strategy. What's your advice for startups on putting together their go-to-market strategy?
Listen, sales solves everything. I think you got to get out there and you got to meet clients, go to conferences, get in person. Like, obviously emails and phone calls and social media, it's all great and important, but I think there's nothing better than getting in front of your clients. So I encourage our founders to get on a plane. Like, if you land a client you're close to, like, go meet them in person, build that relationship. We do a lot in wealth management and wealth tech and fintech, and like, those are long-term relationships where trust is important, especially if there's money being managed and you're the software that's touching it. So go build a relationship, take that person out to dinner, have a meal with them, and, get that client. Because, if you do it right, they're going to be around for a long time.
Yeah, especially in the industries you talked about, right? It's important to build those long-term clients who are going to be around a long time. It's not like you're selling widgets or apps on, social media apps, right?
Right.
So the extremes of decision making, especially in startups, are either wanting more data and suffering from analysis paralysis, or I don't need data, I just go with my gut. Those are the extremes we see. What's your advice for founders and other leaders to not get caught towards the edges of those extremes?
I think you got to go out there and make your sales and go try different things, and like the data will come in. I think organize your data early on and understand that there's value to it, but like it's also going to take you time to get some swings and figure out how things are going to work. How long does it take you to close a client? How many touches do you have to have? What's the right avenue to find the clients that you're looking for? I think there's a lot of people that are experts in this. I don't consider myself the sales expert, but there also is like endless, sales enablement tools these days, especially with AI that we have, with automating your outbound and so forth. So, I think I encourage them, like, leverage your own networks, leverage your warm introductions, leverage the people that you have around you, and then really go start to figure out like what other, go to market strategies are working for you, and start to test some of these tools. I mean, it's pretty incredible, some of these tools we have right now in an AI world that are just like really making it more efficient for finding clients.
Yeah, there's just so many tools out there. You don't need to go without data, be starved for data. You certainly have the ability to do that. And then, then it's, as we talked about, it's important to figure out what it is you're really trying to measure. And then go build your strategy for the data you're going to collect and pull that together and ask, how am I really going to make these decisions? What data am I going to use?
Right. That's exactly how I think about it.
All right. So what advice do you give to your early stage founders about building the team around them that can help them grow and scale the business?
I mean, I usually tell founders, like, if you're going to be successful, you're going to be good at raising money and recruiting. So hire people that are smarter than you and better than you at things that you're not good at, and hire people to do the things that you don't want to focus your time on. Like, you're better off hiring one person that's really good than 3 or 4 people that are just a little bit cheaper, right? You're only as good as the talent that you have. And especially once you get past those first couple hires, right? Like, if you're going to be a larger firm, your job as the CEO is going to be attracting the best and the brightest. And so spend your time there, because like that's what's going to allow you to execute on the vision you have.
Yeah, especially for startups, right? You talked about you want people who are excited to be there, the folks who are going to put in that extra time, because I want to figure this out today. I don't want to wait till tomorrow. I'm not coming in at 8 and I'm leaving at 5 because that's what I've agreed to. I'm looking for that excitement, right?
Right. Yeah. I mean, I think we're in a tough world for some people, where it's like people are working, 9 to 9. They're working on weekends, so it's not for everybody, right? Every startup has their own culture. Everybody has their own lives that they have to, live, and family and so forth. But I think the culture is important, and like getting everybody on the same page of what your expectations are.
Cool. By the time folks get to you or you're funding them, they're pretty much full time on what they're doing. I'm always curious when I ask investors, though, are you a believer for really early stage companies in the burn the ships philosophy? What's your advice for founders on that?
Burn the ships meaning like no breaks.
Start your startup, leave it all behind, and leave everything else behind, and focus only on that.
I mean, listen, I think we are coming in once they've kind of already made that jump into going all in. We're not typically giving people money before they like leave their day job to go do it. I mean, I think if you're taking outside capital from people, like, I think you got to be pretty much like, this is your number one thing outside of like maybe your family responsibilities, right? Like, night and day, this is your baby. You also, you have the trust of people that have given you money, but it's also a big responsibility. So like, I think if you don't have that mentality, maybe don't take outside capital.
Yeah, I think that's really important, right? If you're not ready to do that, if you're not ready for this to be your number one thing in life, if you're not ready to leave that, and there's nothing wrong with having a business and having a job, and in the early days, it's really important to keep money coming in to pay the bills. But if you're going to be taking outside capital, you've really got to be thinking along the lines of, okay, this is my number one thing in life.
Yep, I don't disagree on that.
Yeah. And I think a lot of new first-time founders don't understand that.
I mean, it's a mindset change.
Yep, but they get there. So, all right, I want to take a break from the serious questions. I want to play a game with you. Are you up for a game?
Let's go for it.
All right. The name of this game is Rapid Response. I'm going to ask you a series of questions. I'd like you to respond with the first thing that comes to mind. Don't be fooled by the word rapid. You don't need to give a one-word answer. Elaborate as much or as little as you'd like. We just want to get to know Matt a little bit, okay?
All right.
All right. Matt Ober, rapid response round. Your time begins now. Podcast recommendation.
Invest like the best.
Okay, that's a good one. I do not know that one, so I will check that out. A practice you'd like to see more people embrace.
Listen more, speak less.
I think that's a really good one. That's one that I had a hard time with, and still sometimes have a hard time with in life. But I do try.
You and me both.
Who is someone we should all be paying attention to?
Elon Musk.
Okay, we hear that answer a lot. What's your go-to song to get pumped up, or your walk-on music?
It's a tough one, but it's probably something by Lil Wayne.
All right. The biggest influence in your life?
Probably my dad.
Very nice. A book everyone should read?
Shoe Dog.
I'm sorry, say it again?
The book about Nike.
Oh, okay,
Shoe
yeah.
Dog. Yeah.
Your favorite recreational activity?
That's assuming I have some. I have 3 kids, so I mean, survival.
Oh yeah, it sounds like you let the children outnumber you and the spouse. So
Yeah, I mean, listen, I like going to the beach, so I feel like that's one that I can still pull off right now with their young age.
yeah, that's something great for the kids, right? So it doesn't require a ton of extra effort to pack them up and go to the beach too. So
Exactly.
Your dream vacation spot?
Dream vacation spot. I'm a big fan of Thailand.
Okay. A trend you're excited about?
I mean, I know everything is AI right now. I think the trend that I am excited about with AI is just how much efficiency everybody's getting back with AI agents. I think, as simple as, an executive assistant for booking your meetings and your travel, like, it's pretty incredible what I'm seeing in terms of some of these startups where, we can remove all of that friction out of people's lives. And so,
Yeah,
I'm excited for that.
Yeah, I just very recently started incorporating AI agents into my workflows, and I am all in on that, looking to automate everything I can possibly do, reduce the friction, get it to the point where it runs automatically and gives me a report or a recommendation or something, and then I can click a button that says yes or no or let's talk about it. But
yeah, it's pretty incredible once you spend the time kind of diving in.
I'm curious what you think as an investor. I talk to a lot of tech founders on this podcast, and when I ask them about how AI is impacting their workforce, the tech founders, especially the software developers, are all saying to me, AI is making it so frictionless for us, we can take on much more work. I'm actually hiring more people.
I think I agree and I disagree with that. I think that the best engineers are getting 10x more productivity out of themselves. So I guess it depends on the firms if they need more people, or they're looking at it and they're getting at a minimum 3x and at the most 10x out of people. So like, we're now sprinting so much faster, we don't need more people. But I do agree that from an engineering perspective, if you're not seeing a 3x uptick in your team, you're not embracing it enough.
Yeah.
Flip side is your engineers are not coding anymore; they're becoming architects and almost like managers, and so like it's a mindset change for a lot of people.
Yeah, and that mindset change is tough. But engineers, if you're not up in your game to get to that 3x to 10x more productive, you might be the one on the block who's not around anymore.
You said it.
We'll see. As I said, what I've heard from people is they're hiring a lot more folks, but we'll see how it turns out. Last one, your favorite sports team or player?
I'm a Warrior fan, Stephen Curry, and I'm a 49er fan.
Very cool. Well, thanks for playing our game. It's nice to get to know you a little bit in a way the business questions might not get us there. So we talked a little bit about AI. It's taken out a lot of basic tasks that our frontline employees used to do. And we talked about the leadership challenge that comes with that is that those tasks that help prepare those younger people to be future leaders in the organization are now getting done by AI. How can we take advantage of AI's capabilities and still set emerging leaders up for success to grow in their careers, to become those architects that you talked about?
Yeah, I think the younger people still need to learn the bread and butter of like the industry that they're in. I think in the investment world, like they still need to know how to build a model in Excel. But the AI agents are going to do everything, but they're going to need to know how to like debug it or tell the agent where it made a mistake. So I think like we'll still have that progress. I just think that the speed to getting from being very young to being a leader, and you're going to get a lot more out of your employees, and you're going to have a lot more expectations of them. But I think like the nice thing also is I think the younger generation is teaching the older generation. I mean, like you mentioned earlier, there's so many tools out there right now. It's hard to keep up. And I think like some people are becoming real experts leveraging these tools and can do what used to take weeks or months, they can do it in minutes. And so I think like a confluence of younger people and older people sharing knowledge is going to be pretty exciting.
Yeah, I mean, my journey with AI agents started because I was doing a live stream and somebody came on and started talking about how they created a business helping other businesses implement AI agents. And I said, and they were talking about all the things that they were doing for these other businesses. Was like, I should be getting these agents to do these things for me. Why am I doing this stuff, right? So learning from the younger folks is definitely something going on in my life right now.
Yeah, it's pretty incredible. And we have a guy on our team who's 22 out of school, been interned with us for many years, Ethan. And I mean, what he's able to do with AI is just, building things every single day. And I mean, you just you gotta play around with it, right? I've done it myself, but I feel like for every hour that I've spent, he's probably spent 3 hours or 8 hours doing it. So pretty cool to watch.
Yeah, it's definitely one of those things you just have to. We're not really at the someone can teach it to you stage, and you can get a book, and you just got to go play with it and see how you can get it to work for you.
Yeah, you got to get your hands dirty.
Absolutely, I love it. So we've talked about there's a difference between a great technician and a leader. What else do we need to be doing to help emerging technical leaders, those young folks, whether they're doing AI stuff, whether they're coding, whether they're engineers? How do we help those technical leaders rise up to become our future CTOs and founders of startups in the future?
I mean, I think it's a personality thing. I think it goes back to, you've got to be, not everybody needs to be a founder, right? And I think like if you want to be a leader, like you've got to be able to inspire the people around you. If you're a founder, you're always selling. You're selling employees to join you. You're selling investors to invest in you. You're selling somebody to eventually buy you or the public markets to accept you. And I think if you're going to be a leader within a firm, like it's no different. Like you can be great at what you do, but can you inspire the people around you to, can you be the captain of the team, right? No different in like sports, right? Like not everybody should be the captain of the team. Some people are just good at their job. I think that's always also the problem where people think like to move up within a company, I need to become a manager and have people report to me. And I think it's the wrong mindset because not everybody's cut out for that.
Yeah, I'm curious where you stand on co-founders. You invest in a lot of companies, or you invest in companies. You look at a lot of companies. How do you feel? A lot of investors won't invest in a company if it's just a founder. They don't have a co-founder. Where do you stand on that?
It's not a no. I mean, I think it's similar to like if you have too many co-founders, I think it's a headache. There's a high chance that somebody has a life event or something doesn't work out and there's a breakup. I think if you're a solo founder, there's just more risk for us as investors, right? Like you're a solo founder. What happens if something happens to you? Who's taking over, right? Like our risk has gone up. And, as the first investor and your board member, I'm likely the first call every time something is a headache for you, which is fine. But you don't have a co-founder to kind of like, be your therapist on a regular basis. So we invest in founders that don't have co-founders, but I do think like it's a different, it's like everything else. We got to weigh our pros and cons and the risk reward.
Yeah, And you said something earlier that I skipped over and I want to touch on again. Not everyone is cut out to be a founder. If you've got a really great idea and you can make it work technically, but the idea of being out there building relationships and raising money is something you hate, it's probably great to go look for a co-founder who wants to do this with you and is going to take those on, right?
Yeah, or it goes to what I tell a lot of people is like, you don't need to, one, not every company should raise venture money, and not every company needs to raise money at all. I mean, look at in the world we're in right now, like you can build a company and get to revenue without taking outside capital. A lot of good businesses that don't need investors, right? So you go build a business on your own and make a great lifestyle and living, and it doesn't need to be a household name, right? Or the next Robinhood.
Yeah, I think that's so important. That gets lost a little bit, at least in our kind of growing tech startup community in Las Vegas. It gets lost a little bit. You can have a great company. You can go and you can get that product market fit and get the go to market strategy and get the revenue and build the company and start making a profit. And then when you decide, oh, we can really blow this up and scale it, then you can start to go look for that outside money. We have a lot of people who just start though. Okay, I've got a startup. I don't even have an MVP yet, but I need to start raising money.
Right. I think that's the wrong mindset. I think at this point, like, you can create an MVP with, a couple hours sitting using Claude or Manus or any one of these number of tools.
Yeah, if you're software based, there's almost no reason not to have an MVP and be out there showing it to 100 people and testing it for that product market fit in just a couple of days.
Correct.
All right. So you see a lot of startup pitches. I can't let you get out of here without asking, what advice do you have for founders who are starting to raise money for the first time or even just thinking about it?
And do your research on who you want to raise money from and like make sure that they align with your time. I think also like you got to remember, like, just because an investor says no doesn't mean it's anything to do with your company. They could have conflicts of interest. It's not a big enough idea for them. Like, you get 1 million decks a week that like just don't fit in any area that we invest, or it's just areas that don't interest me, or we only do the US and Canada. So like, no offense if it's like outside of that area, it's just like, for tax purposes and other reasons we don't make international investments. So like, I think that there's all those different things. I think also like, I always try and tell founders this, like, even if somebody says no, like, leave on good terms. Like, the world is small, the intros can come anywhere. Like, there's many times that I've passed on something and I've ended up making an introduction down the road for them. And so like, I would always think like, you get access to somebody, you pitch, doesn't work out, like, say your thank yous, you move on, and karma could come back, and it could have been that 20 minutes might have been worth your time long term.
Yeah, I think that's important to remember. It's never a waste of time. It could lead to introductions down the road. It could lead to a good friendship down the road, right? I mean, it's great to meet someone who thinks you're cool. They're just not ready to give you money right now.
Yeah, exactly.
So I don't want to get you in any trouble if you can't talk about specific companies. That's okay. But what industries or areas of innovation are you excited about and looking to invest in?
I mean, our focus has always been financial services and like vertical AI or vertical SaaS. So we continue to invest in companies in the wealth management space, any companies in like the data and information services space that are, going after the large incumbents like the FactSets, Bloomberg's, S&Ps of the world. We've done stuff in the media space. We're early investors in Beehive, which is the Substack competitor, PunchUp.live. If you watch comedians or like comedy, like all the best comedians in the world are using PunchUp, which has a innovative ticketing platform, but also helps the comedians really like get their audience to know where they're performing and see some of their exclusive content. And given our background in investing in capital markets, we love looking at new investing tools. Prediction markets obviously are the hot thing right now, and so we're definitely got our eyes on everything that's happening there.
Yeah, I think prediction markets are fascinating. I have some, let's say, questions about how they're being regulated right now, but I think the information they're providing is absolutely fascinating, and I'm certainly keeping an eye on them as well.
Yeah, it's a new form of media. I mean, you've got obviously the sports side, but you also have the market side. I think in the financial services side, I mean, it's essentially a new asset class, kind of like options or futures. And I think we saw yesterday Kalshi's big announcement with fiscal to bring KPIs to prediction markets. So now you can predict how many rides is Uber going to give in the quarter, or how many DoorDash deliveries are there, which are numbers that come out on a quarterly basis, and people probably have opinions on that. How many vehicles is Tesla going to deliver this quarter versus last? So it's exciting. A lot of use cases, not just for like predicting, but also hedging.
Yeah, that is really interesting. I had not seen that announcement yesterday, but I'm going to go dig back through my news feed and find that, because I find that really fascinating, especially about that public information that will be coming out about these companies every quarter.
Right. Yeah. We've always had these KPIs, and now I think it's a great way for retail and institutions to be able to, invest in and around these core, metrics that these companies report.
Very cool. So we talked about how startups can incorporate new tech, how the industries are incorporating new tech. How are you incorporating new tech into the business and in your personal life?
I mean, I think for us as a business, I don't think we set out to be fully, AI or agentic, but I think, my partner Gary, Ethan on our team, we've all, really taken a deep dive in. We rebuilt our entire website, everything with AI. That probably would have cost us $50,000 to outsource to somebody in the past, right? Now we have new designs, new bells and whistles we never had before. All of our investment memos are automated, our monthlies and our quarterlies. Every time we take a pitch deck or a pitch meeting, the transcript from that conversation flows into our CRM. It's tagged to the founder, it's tagged to the opportunity. It sends a summary to the other partners. It has follow-ups automated. I mean, you can imagine things that took us weeks to do now are being done in, minutes. So it frees up a lot of time for us to, take meetings and, help the founders that we invest in. And for me personally, not only is that obviously that's a big part of my day, but then I think about, I use AI for everything from planning my wife's birthday trip to family travel to, thinking about my calendar, my personal calendar, and my calendar with all my kids' stuff. How do I have essentially an AI agent as an executive assistant, rebooking and moving things around so that my calendar is always, not that overlap.
Yeah, it's so amazing what we can do. And if you're out there and you're wondering if you should be using agentic AI, or saying to yourself, I should be using it, I don't know how. I mean, what I found myself saying was, why am I looking at this screen doing this? And what else could I be doing if I wasn't doing this? And then that opened the floodgates for me on what I wanted to do with agentic AI.
Right. I mean, I think if it's any tasks, especially data entry or things that, are not overly complicated, that just time suck, there's a solution out there. You can either build it yourself, or there's a ton of great tools out there that are being built and sold that aren't that expensive.
More and more coming out every day. I don't think a day goes by that I don't find out about some new tool that is either agentic AI or enables agentic AI, and I'm here for it.
Yeah.
All right. So what's coming up for you in the next few months?
We're active. We closed our sixth fund, our fifth seed fund back in December. So we're, meeting companies. We've made 7 investments, hopefully an 8th here on the way, as we kind of dig in on diligence and, keep pushing forward on finding great founders to back and supporting the ones we have. We've got a bunch that are, raising money, exciting things happening, with product releases, and we'll gear up for our big annual event that we do every year in October.
Fantastic. Well, we'll keep an eye out for that, and we'll share that news as well. Any other advice for founders or other leaders out there from your perspective, an investor perspective?
Listen, I think there's no better time right now than to build. I think, as somebody who's not overly technical myself, the barrier to entry now is so low, given the tools that we have and the ability to build software. And so, it's an exciting time to kind of just jump on in and become a founder. And that doesn't always mean you need investors. It means you can build a side project that, allows you to bring in extra money or follow a passion you have.
Yeah, I can't tell you how many tech founders we've had on this show who had another business and then created a tech tool internally for their own team and then ended up shifting the entire business to be that tech startup with that tool. So even if you're not looking to become a founder, jump right in and build something. It'll pay off for you one way or another later on.
It's a fun time to play around with the tools that are coming out and just seeing the capabilities.
Fantastic. All right, well, this has been great, Matt. Thank you for joining us today. Where can everyone find you so they can also thank you for joining us?
Thank you. Yeah, we socialleverage.com. That's our website. We're all there. I'm on LinkedIn, and you can find me on Twitter as well. It's Ober Matt J. Pretty active on both, and always happy to chat.
All right. Well, everybody, Matt's given us some great advice today, and reach out. Thank him for joining us today, and get your questions to him. And I want to thank all of you for watching and listening. If you found this conversation valuable, go ahead and share it with someone who can use it. Leave us a comment. Don't forget to subscribe. And since I'm asking everybody for favors, if you're on a podcast platform where you can leave a review, please leave us a 5-star review. It will get us out there to a bigger audience and let more people see this great conversation that we had with Matt today. So we've got a lot more amazing leaders coming your way. Go out there, do great things today. Onward and upward.